Hello, folks. Brandon Chapman today. It's another edition of the Theo Night video for December 19th, 2022. We're getting close to the end of the year. It's going to be a busy time for a lot of people in the next kind of week or two. What's happening with the market? The S&P today, of course, falters or continues to slide. Post FOMC statement last week, Powell being hawkish did not really create the positive jive or movement that you might have expected. It looks like they're going to raise rates more. But the reality is he's probably lying, right? So he's trying to provide the impetus to say, we need to sell, so they can come in and go back to ZERP again. But is now the time to get bullish? There was a large print in the SPY that came in that gives us kind of a key level for the market. And we'll see whether or not we can hang on to it going forward here in the next few days. If we can, maybe we are setting things up for a rally into the end of the year. Certainly we're pretty oversold in the near term here, but again, waiting to see what sets up in the near term and coming up the next couple of days. And as we go into next week, the Santa Claus rally maybe is intact for maybe a few days anyway, before we go into the new year. It's kind of like one of those things like we're heading into next year where things are very uncertain. Recessions, more than likely the Fed is expected to raise rates. So obviously this is kind of the calm or the eye of the storm that we're seeing right now in the month of December, even though the last few days maybe doesn't seem like that or feel like it. All right, so let's look at the SPY here. And these kinds of prints are significant. Not the market on close stuff. That stuff's just doesn't really carry much of any weight. But you'll notice here a large buy transaction, 1.34 million shares traded in one print at 380.99. Now you notice we've had these in the past. Like for example, right here, kind of let a little bit of run, then we broke it. We began to pivot lower. This occurred here. We broke it. We really started to sell off hard. Over here, once we started to take this level out, started to rally back up again. And now we got this print here at 380.99. And I keep track of this stuff, not every day, but I do try to follow it. I mean, just huge prints back here that just showed end of 2021. It looked like we're just leaning into a bear market here as the strong hands are selling to the weak. But anyway, we've got this nice little point at 380.99. Now this falls at about the 50% retracement of this bullish trend. This is a kind of a key support level. If we break 372.50, expected to go all the way back to 350. I wouldn't expect that until next year. So right now we're kind of at a key kind of support level here, projected support. There's some prior support that kind of sits around this level as well. We're looking to see if we bounce here. So it might take us several days to settle in, but at least now we have a pretty significant price level. We are slightly below it to end today's session. We finished at 380.02. This is 380.99, but we're essentially in that area. So we're trying to see over the coming days, do we kind of grind around this level again? And then do we start to take out today's high? And if that happens, maybe it's later in the week, maybe it's next week. This may provide that upward move, maybe back to 400. Maybe it's just a 390 on the SPY, around 3,900 in the S&P 500. But we might be setting up for a little bit of a respite, a bounce here, but it doesn't really fundamentally change what's going to come next year, okay? So as we look at sectors and their performance today, you'll see all sectors were down. Staples were the best performing. There was some bearish activity in this one that came in today on the Feb 72. Looking at down here, it's a 50% retracement of this trend, or same trend as that one. So again, very overbought. XLU, XLP. XLU is one that saw some unusual option activity back here on last week and began to break down the last few days. So stuff that's overbought is starting to sell. And then you have the stuff that should sell anyway, right? Let's give percentage change, make sure we're ordered correctly. Technology, right? Technology broke support last week. We're rolling lower. Do we see kind of a little respite here, kind of grind lower, grind a little more slowly? Maybe just kind of, try to emphasize, the more non-discretionary, more consumer staples oriented, non-cyclical names. Cyclicals breaking support today. Communications breaking down today. So a lot of these areas that are very cyclical are just not doing so hot, right? Materials here, again, breaking support, heading lower. If we look at gold, This gives us a sense of the dollar. The dollar is just kind of hanging around at the moment. You look at against the euro, for example. Again, it's just hanging around for the last week. There hasn't been any significant movement in the dollar, either positive or negative. And so all the stuff we're seeing here is about what? It's about the negativity. So financials is one area where you're seeing that the sector is down, but Wells Fargo, Bank of America, JP Morgan, all these companies were actually higher today, not by a lot, but close to half to 1.5% here. So does this lead to financials maybe catching a little bit of a bid? Well, we do have to kind of dissect what financials we're talking about. We're talking about big money center banks. Or are we talking about stuff like American Express? Okay. American Express broke support last week. This is something that Blake Young and I were on the Wednesday at the closed chat for all of our TheoTrade subscribers. And, we talked about the potential breakdown in card companies like Capital One Financial, American Express, Discover Financial Services, etc. And they've had a really tough week as we're really talking about the issue of balances, right? The idea of people defaulting being a major issue, cars, etc. Ally was another one we looked at. But American Express has held up, relatively well, okay, over the last couple of months. But we're seeing this big breakdown today. Now, some of those coming in was, I forget down right down the strike prices. Well, we'll be able to find them. It's in 17 Feb in here. You'll see 5,000 contracts at 135, 5,000 to 115. What this is a long put vertical, buying the 135, selling the 115. I know this is like way out there, but it's also for 17 Feb. Is it possible that we could see a 115 handle on American Express by February? Absolutely. If we start to see unemployment tick up, that's probably one of the biggest things we need to see for the market to really find any sort of bottom. We got to kind of see that peak in unemployment. The default and all that stuff, that could happen very, very quickly. And it just kind of feels like the Fed wants it to happen, right? That they feel like they need it to happen so they go back to ZERP and funnel all this money out to their constituents, the banks, the financiers, et cetera, right? The federal government. The federal government needs them back at ZERP again, right? Inflation might be an issue, but they need to kill it in order to try to bring the patient back to life again. And hopefully inflation is not an issue. So that's my thought going into 2023. But American Express, here's a big trade, looking at big downside in American Express. So again, it's just kind of dovetailing with that kind of thought process. Nike today. So Nike announces earnings tomorrow. And I'll tell you, I like anecdotal stuff. I like to shop, I like to buy stuff at a discount. Went to the Nike outlet. I'm a Ross guy too. Hasn't been a lot at Ross until recently, right? Ross has been getting more Nike stuff, more Nike shoes. Went to the Nike outlet on the way home, and all of a sudden got stuff on that wall, 40% off, usually 30, and it's a lot of stuff you see in Ross. And I'm like, interesting, right? Not a lot, but some of it. And it's interesting. We're starting to see more Nike apparel filtering out. I was looking at Under Armour. Again, like the Steph Curry's, basketball shoes. Couldn't find them forever. Now you can. So makes you wonder about, again, is the consumer in a great position? Look, notice Under Armour's down 4.78% today. Not because I looked online, but just coincidentally, right? But the idea is that, Nike may be moving lower. Unfortunately, I hate to see the movement happen before the earnings because now it calls into question, are we looking at kind of a skewed result where if it's negative, we've priced some of it in, so it's not going to go down as much. If it's positive, we jump back up to 115. But look at what happened last time, and the stock still gapped down dramatically. As we look at the expected move for this week on Nike, it's about $8.40. That's about what it was this morning. So we have another day pass. We have earnings coming up. The expected move's holding at about $8. That gets you down to 95. So, there's various strategies you could do. Double calendars with the higher skew, targeting kind of that 95, the expected move on either end, hoping the tent doesn't diminish too much in the middle. You could do an out spread, a butterfly down here, just targeting very low risk, high reward strategy, the lower end of the expected move here. But boy, could we wake up, on tomorrow? Sorry, could we look at it tomorrow after the close and see a big gap down? Well, again, today's activity, somebody's taking a bet that that might be the case, and it's for this week. Next week, down here around that $96 strike price, 95, which is about where the expected move is for this week. So again, I thought it was interesting seeing some buying activity down here at 95. Again, kind of indicative of the fact that maybe earnings aren't going to come out quite as good. Guidance may be guiding lower, and thus more downside here. So again, you can kind of take that in-out spread kind of scenario. In-out spread is where you're kind of buying in the money and selling out of the money. The vol's a little bit favorable for it. Buy the 104, sell the 102, cost you about $1. So again, there's some things, and that's something you can kind of be patient with looking at tomorrow, since they're not announcing until after the close. But you can kind of do the double-sided calendar on both sides, around 20-25 delta for the front to next week. And that may give you kind of this tent type thing where, if you finish in the middle, you don't make as much, but you do okay. And so we have an instructor here, Blake Young, does that. I trade a lot. So anyway, but again, a little more of a bearish bias based on the option activity coming into Nike today. We looked at AXP. So we think on the financial side, what about stuff like, mortgage REITs? They've done really, really well. Housing industry is struggling. Dovetail this with American Express being more bearish today. I mean, are we seeing a setup for mortgage REITs to break back down again to that 16 level? There's NLY, also AGNC. Can we break down to the 7.5 level? I think that's probably pretty reasonable going into next year. And there's a trade today that kind of reflects that kind of outlook. 10,000 contracts, mostly bought at the $20 strike price for 17 Feb. Right? You can look down here, option time and sales. You'll see almost all of it in one print as well. So again, we're looking at downside here to about 20, which is about a 1/3 retracement. We start to break 20. This is where the gamma squeeze can kind of come in and drive it down further, but we could definitely see this much, much lower levels. So again, you can kind of see how you might construct a trade around that using spread trades, which we have a lot of different strategies for capitalizing on varying volatility conditions, whether it's implied volatility or skew, to benefit from downside movement. Also, we'll kind of wrap it up with these two. WYNN, WYNN. So WYNN Resorts breaking down today. So this is one that I've talked about quite a bit, going back to the 31st. Again, getting the big rally here and the continuation, hitting the targets. And now we're seeing the opposite, right? We're seeing the breakout, right? The breakout to the downside. And so we got the bullish activity here. Now we're seeing the bearish activity come into WYNN now. And this is for this week for a 23 December. And, it's kind of in the money a little bit here, but 84 strike. And kind of in this area here, you can see it's kind of filtering out as well. But the idea is, again, at the money at the time, but we're breaking lower. Volume was above average today. We could readily see this at 76 or maybe 72. Those are some key retracement levels. Pretty strong level of support down here around 68 as well. So again, looking for a breakdown. And these are ones, again, the volatility favors. You could do an out of the money spread here. You could sell some premium. That's for 23 December. Probably go out a little bit further here, like a 20 Jan. Buying a vertical or maybe selling selling something to pay for something over here. I mean, these are different things that, again, opportunities, even just doing a simple in out, looking for the stock to be lower over the next 30 plus days seems like maybe a pretty good, reasonable expectation. And it wasn't just with WYNN. It was also with Marriott. I'm not ready to put that on my list here. Marriott today, a 130 strike. So all the way down here, we got kind of this, this wave. We haven't really completed it. We haven't found support yet, but just assuming this is all we get and we bounce, you might look for that bounce off of resistance at 157.50 or break support here, the low today at 150.60, but looking for 140. The trade today was actually further out of the money at April 130 all the way down here, which puts you to that kind of trend target range. Now it's for April. So you might need a little more time for it to get it, but in the near term, 140 seems like a pretty reasonable to 145, a reasonable target for Marriott. You might look for this thing to pop back up again or trigger below today's low as a potential opportunity. We'll wrap things up finally with NCLH. So again, travel stocks. Here is a cruise line company. Man, just wonder how well these companies are doing right now. But this is out there at Jan 2024, 750. So we're way the heck out here towards the lows. And so again, there's not much gamma in these kinds of stocks options because of the fact that, they're so long dated, but it's just reflective of just the expectation that yes, we could rally into the end of the year, but look for those setups heading into next year for more downside opportunity in a number of these stocks. As we kind of wrap up 2022 into 2023, this might be part of that list you're creating for bearish opportunities going into next year. Anyway, we'll kind of wrap it up there. It's been a pleasure being with you. We'll catch you back next week on the video.